So in fact, this will be the last time we're going to be looking at a series document that has been specifically written for us by our technical analyst. Mark, we're going to take a slight break with that particular series, but this particular one that was sent through by Garth McKenzie from Traders Corner is about trading reversal patterns, which has to do with what happens when stocks kind of bump up against some sort of baseline that they appear to have, when you look at the chart anyway, some sort of resistance line, and the trading dynamics around that suggest that potentially anyway the buyers are in the ascendancy, so they represent opportunities to go in, go long, right?
Yeah, I mean, look, first of all, he's kind of combining two sets of two kind of schools, I suppose, of analysis in the sense that, first of all, using candles, Japanese candlesticks, which we've mentioned before in these programs. And secondly, he's
Since we've got the time, tell us what those are. The color there represents what's happening in the market on the day, right?
Yeah, whether it's an ascending or a descending candle, the colors accordingly. The line is the entire, the vertical line is the entire movement that's taken place during the day. And the actual kind of candle itself is the range between the open and the close price in that time period. So each one represents one distinct time period a day, I think, in terms of this analysis. There's a lot of different and varied kind of patterns. It's a bit of a very specialized kind of candlestick charting is very specialized, but there's some very reliable signals which I actually use on the short term to trade quite seriously with as well. But a lot of it revolves around the kind of little cross that's in the middle, the doji.
That one there?
Yeah, which is where the market has kind of set off some kind of equilibrium. And then it's what's happening on each side of that. And these patterns are very, very well recognized, very, very well demonstrated, and fairly classic on day-to-day kind of trading.
What they are is they're graphical representations, but what they really are modeling, and where those names come from, is they suggest a certain process over some time frame where there's been a transition where the buyers appear to be in the ascendancy compared to the sellers. I mean, these things don't just come out of nowhere. They come out of a sort of specific observed set of patterns.
Yeah, I mean, look, originally I suppose there was a bunch of Japanese guys sitting around observing who was moving rice when and where over what time period. I mean, that's maybe just rice sacks rather than candles. But you often find the ones that I like are not so much the star reversals, but it's the engulfing kind of candle situation where you get ranges from 1 hour to another, or from one day to another, that are larger than the previous range, where you can see...
there we go, engulfing candle.
Exactly, where you can see the...
By the way, I was told by Garth that I wasn't allowed to make jokes about these names, right? So I'm going to refrain from that.
Yeah, we'll quote them in Japanese, make him laugh. But it's a nice way of quantitatively looking at what's happened over a distinct time period. And you can see that the stock that was giving problems with the previous pricing has been taken in, and that buyers have taken the price a little bit higher. Combine that with certain key lines and one or two little bells and whistles, and you start to get a very, very good indication as to where the supply-demand side is going on the actual underlying asset.
Okay, perfect, good. And the fact of the matter is this is a document which has been written up, and each of these is presented alongside explanations and examples.